Okay, Dean Kim is now joining us. He's head of Global Research Product at William O'Neill. Dean, good to have you with us here. Thank you very much. You know, I was just pointing out that the Nasdaq is up almost 4% in the 3 days of trade post the Powell speech at Jackson Hole, whereas the Nifty is absolutely flat. How are charts looking here in India? I mean, if you've taken a look at the Nifty and other indices, no problem for the small cap index, which continues to do very well. But what about the Nifty and the Bank Nifty?
Yeah, I look at the Sensex, and you know, right now, obviously, it's trading below the 50-day moving average, and next support is at the 100-day moving average, so it's about 2% away. So I think it's important that the index retake the 50-day moving average, and then after that, resistance would be, you know, currently resistance is 50-day moving average, but resistance after that would be the recent highs. I think that's stemming from weakness that we've seen in Asia. So particularly with China reporting such bad numbers, obviously now they're trying to, implement some stimulus. And so we are seeing some positive reaction within Asia. For example, just today, we turned Hong Kong to confirmed uptrend. They had a follow-through day. And then a few days ago, Japan had a follow-through day. And then coincidentally, yesterday, China announced some stimulus in terms of lowering stamp duty taxes on stock trading. I think the market is waiting for them to come up with more fiscal stimulus, which is going to be very important, given, areas like property markets in China in trouble. So hopefully we're going to see some of that come through. And when that happens, I think rest of Asia will follow through as well. Now in the U.S., it's a very interesting day today. We've had a couple of weeks of concern as indices were about to test the 100-day moving average, but U.S. market had a very good day with both S&P and Nasdaq rising above all key moving averages once again. So we put the U.S. market into confirmed uptrend today as well. We had a follow through today with very strong volume. Pretty much all sectors rallied, in particular technology, retail, healthcare outperformed more than other sectors. Small caps rallied hard as well. Obviously, the key reason is, basically we saw July's new job opening numbers coming in lower than expected, and consumer confidence reported for August coming in lower. So in this case, bad news is good news, and perhaps the market is contemplating the Fed's thinking, hawkish thinking, and they may reverse going forward. So we'll see what happens. But now it's important for the indices to hold support at the 50-day moving average and not immediately retreat back down below it. So I think, tomorrow and the next day is going to be very important.
Got it. Dean, for our own markets as well, the last time we chatted with you, you said that the Indian markets is in a confirmed uptrend as well. But, since then, the market has stalled a bit around this 50-day moving average. How are you feeling about that? Do you think there is more upsides in store?
Yeah. Since we spoke last, we put India market in under pressure. So when it broke the 50-day moving average, we did put it under pressure. But we are seeing still, as Prashant mentioned, the breadth is very good. So a lot of sectors are participating, providing with some good ideas. We're finding, obviously, there are stocks that continues to rally and look extended. So given this environment in terms of the market being under pressure, I would place some caution. And when a stock is above the 200-day moving average by about 40-50%, and you see some distribution heavy selling, you ought to be trimming position, and then take some of that and look for stocks that are coming out of early stage basis. So some of the areas that are popping up now, like Astral and consumer cyclical. I think last time I mentioned Sonia, Precision Forging, TVS Motor, EIH. Those are all sort of in the consumer space. And then in financial space, Manappuram Finance, IIFL, and even in healthcare, Cipla and Alchem. those are some of the names that are kind of setting up or trying to break out from early stage basis. So I would focus on those types of names.
All right. Hi, Dean. Good morning. What about IT? In the past, I think you were talking about Coforge out there. How are things looking?
In terms of IT, I think still Dixon Technologies look good. Unfortunately, we still need to be patient on the bigger cap names like Tata Consultancy or Infosys. Although in the US, I am seeing some improvements in those IT service providers like Cognizant, Accenture, and so on. But so it's only going to be a matter of time. But I would stay patient for the large cap IT names.
Okay. And in the banking space, any thoughts? I mean, there has been pressure on names like HDFC Bank, which has been one of the biggest laggards, right, this year. SBI is also down about 10% from its recent highs. Do you see the trend turning there?
Yeah, it's sort of disappointing to see one of the major banks sort of under pressure, but there are other banks that are doing well, like Federal Bank. It's setting up well. I think IndusInd Bank, it continues to hold up well, and then ICICI. There's a lot of smaller cap banks, like Camden Homes and so on. They have done very well, but they're probably too extended at the moment. So I would focus on larger cap, but HDFC has a bit of ways to go. So be patient on that one.
All right, we leave it at that. Thanks a lot, Dean, for joining in, and appreciate your time here on CNBC TV18. Let's slip into a quick break. On the other side of the break, our entire research team will be joining in to give us a list of top 10 stocks. Stay tuned.